What is going on, everybody, and welcome to another technical analysis. And what I like to do in these videos is provide you guys some entries and exits, some stocks that I am looking at to enter. And if that sounds like something you're interested in, consider subscribing, as I do also provide a weekly analysis where I talk about weekly events, current events to get you prepared for the week ahead. And I also provide a daily pulse on the market at Hemi137 on X. You can also check me out there. So, with that being said, let's dive into some technicals today as we are making a new all time high over the past week. We are headed into the Christmas rally, low volume, as we are waiting for the transition of the new administration on January 20th. So, with that being said, let's go ahead and push this up to the daily here. As you can see, we've talked about this multiple times, but we've been running up quite substantially for quite a while. Now we've paused. I've talked about how we've paused, but as of right now, we're in price discovery mode. So really what you're looking at here is just support around this area at this the 6K mark. I think we could potentially run up to probably that 6250 mark is probably our ceiling right now. Maybe we get an Xmas rally up to that point. Again, we're still free spending at this point, so you have to keep that in mind. Now that may change dramatically if there is an event that occurs, but ultimately right now, again, we are in the one of the most bullish cycles of the year, so you do need to keep that in mind. But you are anticipating a lot that could potentially play out in that February or March time period. So just keep that in mind moving forward. But as of right now, again, you need to kind of take a look. We're kind of bell curving here, which is which is quite crazy, right? We had this just 2 years ago. This is essentially when tech and inflation were fighting inflation during this time. From that point, we stopped raising rates, which allowed the market to start pushing up, and then it started pulling back, which again came at a very critical period of time when we actually paused. And then when we paused, essentially we've been running up ever since. Now we started cutting, which is a more hopeful thing as we start leading in this very, very tight upward channel. Which again, the more vertical you go like this, the more of a case that what's going to happen is this thing's going to turn over and correct at least 75% of that. So you're probably looking at least roughly around that 47.52. Now, on average, a recession would be 42%. We go over this quite a few times, but we'll double check it here. So an average of 42% correction if from our current level would still put us at roughly around that 35 level, which is the same support that we looked at right before inflation. We started to manage inflation a little bit better. This was right after a Powell event. The next day, the market flushed about 80 points, then recovered about 110 points. And the market's been going up ever since. So, and then again, a very critical time here when we essentially actually paused rates at that point. So, again, looking at the charts, explaining events gives you more of ideas. So when we go through cycles like that, again, you know how to handle it. If we do come in some inflationary cycles, which we're starting to see inflation start to come up, but again, something I've talked about is I don't know, given the new year, the new administration, the changes they want to make, if the spending's gonna stop in general because of what's going on with the debt ceiling is coming back. So you're not going to be able to spend $1 trillion every 90 days. With that being said, we'll have to see how the market takes that. If inflation starts to come back, it could correct tech again, which could correct this dramatically because that's essentially what's been holding up the market. And given some of the recent data that we have seen, is 80% of essentially the Mag 7 that have been pushing up the market have been doing massive historic buybacks. So keep that in mind as you look at this chart. So that's essentially what's been preserving the stock price and keeping it up higher than it probably should be because of that fact. So again, looking for this thing potentially break out here. We're in price discovery mode in the Christmas rally. Looking, a lot of people are calling for 6,600. Maybe we hit this and bounce back down and try to push back up. But again, ultimately, you want to be very careful around that February, March time period. That's normally our down months over here. So I could see us attempting to try to continue to chop up until January 20th. And then at that point, then it's fair game. So we got about, again, 2 months here for that to play out. So we'll see how that does play out moving forward. Now, Bitcoin obviously has been struggling with the 100K mark. We talked about this. It continues to struggle around here. It got rejected hard, like we said it would. Came down to the 90. The question is are we going to consolidate around here for the next major move, or are we going to break down? And I think what could potentially happen, what I would like to happen, because we've been so red hot. Again, you have to understand where we've come from, right? We've came from 16K not that long ago. I say not that long ago. It didn't seem like that long ago, but right, we touched 16K back in December of 23. Is that right? Or 22? Is December of 22. December of 22 is when we bottomed. This is also when tech bottomed as well. Wasn't tech bottom in October of 22. Maybe it was only in 23. Interesting. Nonetheless, that's when we bottomed, and then we essentially have been rocketing up ever since to 23. So even with this move here, if you look at the 3100 level, when we moved up, that was at the peak. It was about almost a 35,000 percenter. And if you look at where we're currently at, our current bottom is much higher, which obviously is a much bullish sign. And then we're peaking right now. Wait, let me look at that real quick. It didn't look like it was right. It's 2,500% from that move. And then our current one, I think is actually much higher than that. I think that move is much bigger. I mean, if you're talking about 2,500%, that doesn't make any sense. I mean, it's not going to move as much as it did here in that sense as far as percentage, because again, you're making a higher low here. But again, still very big move. And this was a huge bull flag being developed. So again, psychological numbers, to expect it to just pull back by 10K and then break through that. I still think this is going to turn over. We might see our higher low, maybe our new higher low will be roughly around that 40K mark or something. And then maybe we go back and then we actually break the 100K. My expectations are we continue to hover around 100K mark as we see essentially the L1s and essentially alt season really kind of take off into February, March period. And then from that point, I think ultimately what you're going to see is the market will turn over, and then we'll make a new higher low at that point, and the whole market kind of resets. Would make sense. Again, it's not saying it's 100%, but that's what I'm kind of feeling like the market might do. Again, feel like it may chop between here. Bitcoin will chop until February, March, and then we have our L1s and alt season. So that's what I'm thinking. Will it play out that way? We'll have to watch and see. But the fact it keeps getting rejected here, if it keeps probably got like 3 or 4 more times before this thing does turn over, expect it to at least come back down to the 72. From there, it's got solid support, so you get a good bounce there, which is kind of like we've seen with Bitcoin, where it had that major bounce on that second attempt. How it sold off and made that major bounce. Expect something similar to this, where it may sell off to that 70 mark and then get another big bounce, attempting to try to go for the 100K, and then fails, falls short, and then corrects again. That's kind of what I'm looking for. Again, trying to buy the top here at this 100K mark is really pressing it. So I would be very careful moving forward. So that's what we're looking at there. Let's take a quick look at TLT. Again, this thing has been, it's been attempting to break out and keeps failing. Got kind of a little upward channel here. I mean, this is the bad thing about when you look at these things. I think like that's going to potentially play out there. So expect this to continue to chop in between that 100K mark, the 95K mark, and then break this smaller wedge here into this, and it's going to remain more choppy. Puts this, hey, guess what? It puts us in roughly around May to potentially April, May, springtime, March, April, May to break out of this and start shooting up. Expecting it up to I don't expect it to hit 180. I think there would be a massive market correction if that does happen. So not really expecting that, but we'll see. It is breaking out of this smaller time frame here, back into support. It's first major like breakaway and retest. We'll see if it doesn't get rejected. If it holds here, that's a good sign. Could try to make back to 100 points here on TLT. So we'll be watching that again once. If we relate this back to 2007, 2008, that was when they started doing a lot of panic cutting in January. So we want to keep that in mind. It could potentially be the same scenario in January. So January is going to be a very important month next month. So especially around the 20th, around when Trump comes in. So I do need to keep that in mind. Now Tesla has been breaking away. Obviously, I've been talking about this one for a long time, around the 170 mark. It's been kind of hovering around. Now it's consolidating again, looking for potentially another big move. We're looking for the humanoid breakout move. So do keep that in mind. I am hoping this does come back down below the 300 one last time. I think if the market sells off heavy, we could see a 275 mark. Maybe the last dip before this thing really starts ripping. Again, if the market does start correcting, obviously everything will take a hit, but you have to watch and see how everything does. Tesla, even during really bad times when it starts getting bullish like this, it will drop a little bit, but then it will hold. So hoping it will get around the 275 again. But we'll have to watch and see how that does play out moving forward. But this is one I'm definitely keeping on the map as of right now. The support's sitting around the 313. That top being the 360. It keeps getting rejected out of there. Obviously, it's a huge red candle. Market may be waiting for the market total correction before this thing does finally get really bullish, but I think it's only a matter of months before that does happen, especially with the humanoids aspect of it that we've been talking about for a while. So, and you can see these. I do trade a lot on the 1 hour time frame. That's why there's these smaller zones to play intraday. So we're on the 344 and then 333, so about a $10 mark there for Tesla, which is about right. That's about what they priced in for the week. So looking at that, always moving forward here. AMD is a big one I am really watching closely. I like the support here. You do have some pretty heavy support here at the 130. It can drop all the way down to the 107. There's support there as well. But as you can see, looks like we are kind of wedging here as well. There's some good, I know on the higher time frames, I have this on another chart, but as you can see here, you got some pretty solid support coming into this. And then you have this other wedge here, which, I mean, looking at the other chart, it could be a bad thing. It could be a good thing. You did see that here, and then you see a massive sell-off that could play out here as well. But you are coming into that essentially a big breakout point where that's swinging to the upside or to the downside. I have taken a position in this, so AMD is one I'm really watching. If it does break down, I'll continue to add to this, but your other levels could be the 110 mark. I got some really solid support here at the 95 as well. So either that's a 40 point drop, but again, I think the upside of this thing is still massively past this previous high of 227. I think we could see a massive push up after that, and maybe an Nvidia type move. I don't think as big, but I think you could still potentially see a bigger move out of this as well moving forward, because AI and AI infrastructure are still going to be very much a good story. But again, you get a lot of hype before you get the real use cases, so you just need to keep that in mind. Brought up SoFi and stuff before, but as of right now, it's still not a good buy. Right now with Celsius, I still really like the stock. It's holding well around this $30 mark. It's got some solid support. Again, I think it can recover potentially up to the $100 mark when the market turns. Right now, you're getting a lot of extra sell pressure because you got tax loss harvesting going on right now in the month of December for the new year. So do keep that in mind. That's why you're getting a little extra sell pressure here, but it's still holding very well at the $30 mark. So I still really like this. We'll continue to accumulate this as well moving forward. And then ELF, let's take a quick look at ELF. ELF is recovered and maybe looking for this to reject and potentially sell back off into under the $100 mark here. My only concern with ELF is that if there are tariffs in place, a lot of their products come from overseas to make them cheaper. That's essentially what their selling point is, and their essentially their growth, their massive growth that they've seen. So if that does affect them, it'd be interesting to see how that affects their bottom line moving forward. But as of right now, still holding that 133. Got some pretty soft, strong support roughly around 115, but our major support here is again at that $87 mark. So looking for almost a head and shoulders, it looks like here, could potentially roll over. And we'll watch and see how this does play out. WBA Walgreens, this position, again, I want to put this disclaimer out there. Again, this is financial advice. This company is still structurally doing very well, despite the whole the current social sentiment around this company. It's still very much a very well-known name, still does very well, and also their dividend is still very, very good as well. And the fact it's all the way down to the $9 mark is insane, in my opinion. So again, I've taken some position, but again, I've managed my risk and the size of my position. I'm not whole accounting this thing or anything like that, but again, a good potential position. Let me drop this down to the lower time frame. So you can see the zones a little bit better. Actually, I'll drop down the 1 hour, as it makes a lot more sense with all these little extra lines in it. So as of right now, what you can seeing is this essentially lower level here around the 825 is the bottom. I got some smaller zones here at the 883. Got some really tight zones here at the 916 right now, which is kind of the ceiling right now. Got another potential zone here, the 975. So almost like a 25-cent increments. This thing is bouncing back and forth, but on the higher time frames, I really do like this because I do believe it can really recover and even hit this gap fill up here, which is around that $16 mark. So I do believe it can recover quite a bit. So the fact that it's in single digits right now, again, you have to be very careful with a stock like this. But it's one I will be playing. Again, it's risky, so just keep that in mind. But again, as far as the numbers go, it's still a very good company. RX is another one of those companies. I like the potential of this. Again, it's the numbers are not great, and much like any other forward starting company, the fact that it's I've bought in down here, just to keep that in mind. I started buying around here at the 6, but ultimately right now, what we want to do is I think this could potentially be a huge play. With AI moving forward. Now it does help create like pharmaceutical drugs and stuff like that. It matches up, people's essentially DNA with pharmaceuticals as well. So it could be a really good using AI. So it is the industry leader. Is one I am currently in position in, smaller position. I'm not trying to get super heavy in this position. Again, because you are at a lot of risk, especially with the current market sentiment, it could get pretty bad. I'm not saying it'll hit $42, but right now, as you can see, the consolidation here is really nice, roughly between that 976 and the bottom being around the $5 mark. So there is about a $4 swing there. So with that being said, it is consolidating nicely here. We'll see if it can recover some, but I am taking a small position on this to be definitely a long-term hold for this, much like WBA will be a very long swing, but that's the one I'm looking at there. And then PLTO, I've been talking about this stock for a while, accumulating this. I think this will be a good stock moving forward for a restaurant. I don't really mention a lot of restaurants, but I was trying to look for a restaurant pick moving forward. And this one has great potential moving forward. Sells a lot of hot dogs and burgers and stuff like that. Now with RFK, we'll see how that goes, but ultimately it's not that issue. I think it's more the items being used. I think if you were looking more at like a lot of heavily processed shelf items like Ritz crackers or something like that, or I can't even remember the brand, like Post or something like that, would be much more concerning as opposed to a restaurant like this. So um, right now it's holding that 1090. So slowly just accumulating shares with this at the current consolidation points. And again, this will be a much longer swing, but I am liking this moving forward. I think it could easily recover back to 25 once the market in general starts recovering. And a lot of these, you have to understand, is the market will start recovering. I think in about a year, 2 years, the market will start really recovering good, and then everything will start pushing back up in general. So I think you can see these levels, these normal levels again. Right now, you're in a depression, so obviously it's not going to do so hot. But I think we're going to start seeing more of a recovery here in the next year or so. So that's ultimately what I'm watching for there. And then let's see, what else are we watching as of right now? I BA, obviously, it's got this downward ascending wedge or descending wedge. So watching this to see how this is going to play out. But again, looking for this to recover. Even though this company is so garbage, I wouldn't want to, with all those risky stocks that I just showed you. I'd rather get in them than put anything in this, just because of the fact, especially with the Doge coming in. We'll see what happens, but if it can break out at this 160 mark, you can recover quite a bit. I think this can at least recover to the 220. So that may be something to watch here moving forward. But this is still in a very good position to potentially break out. Potentially even this with a Christmas rally might break out of this. If it rejects again, again, you got some really solid support seeing here at the 224. So watching that as well for BA. But again, not one I really like in general. I don't see any future or anything. It's more just a government entity at this point. So, and then JP Morgan, obviously it's flirting around this 250 mark. Its movements have been a little bit bigger than normal. Normally it sits around like 4, but it's been sitting around like 5, 6 lately, which is a big deal for a big bank, the biggest bank in the US like this. But again, it's just like the market has just gone straight up. So once this actually starts correcting, I think January is going to be a big exposure to a lot of these, and a lot of these companies is falling apart because, again, unemployment, I understand real wages and everything, and with the whole migrant situation. And I think that skewed a lot of the numbers just in general because they started counting full-time employees as only working 40 hours a week. So there's a lot of things that come into account. And I think once a lot of that stuff gets cleared out, you'll get true numbers on this, and it's going to correct a lot of things in general. So, because again, you look at just from a bigger perspective, it's gone pretty much nothing but up. There's a couple small red candles in here, but again, massive up push to this point. And then I think Win is another one I really like. I do want this thing to kind of correct. Now this is a very high time frame here. I'm hoping this thing can correct back down to the 58. Wouldn't mind picking up some Wind as a strong dividend. I don't really pick out a lot of dividend for long-term hold, but I do like Win for that purpose. If we can see a drop down back down to that $50 mark, would be exciting, but not saying it's guaranteed right now. Again, the ceiling is that roughly around this 106 mark. If we can break and sustain above that, I do believe it will correct. We have seen a correction down to 73. I think that we'll see one more drop down to the 60, I believe. But we'll watch and we'll see there. So that being said, that is all I have today. Go ahead and drop a like. And until next time, I'll see you later.